In 2008, the world stopped breathing for 17 terrifying months. Banks fell like dominoes. Families lost homes they had spent lifetimes building. And for a moment, the global economy stood on the edge of a cliff, staring down into the unknown. But what if that crash wasn't just a financial crisis? What if it was a mirror, showing us how fragile our entire system really was? The calm before the storm. Before 2008, America looked unstoppable. The stock market was rising, housing prices were skyrocketing, and credit was flowing like water. Banks called it innovation. Economists called it growth. But underneath, something was rotting. Ordinary people were told, buy a house. Don't worry if you can't afford it. Prices always go up. Loans were handed out like candy. And Wall Street didn't just sell those loans, they multiplied them, sliced them, and turned them into gold on paper. The whole thing was a castle made of cards, built on hope and debt. The great lie of endless growth, when you look at history, every empire falls for the same illusion that growth has no limit. Rome did it with territory. America did it with credit. By 2007, Wall Street was creating $60 trillion worth of financial contracts based on mortgages, many of them worthless. The people who signed those papers, teachers, truck drivers, nurses, were never the real players. They were just the fuel. The real game was played in Manhattan boardrooms and London offices, where suits bet billions on which loans would survive and which would die. It was a casino, and the house was always Wall Street 3. The fall then came the moment no one expected, or maybe no one wanted to see. The bubble burst. Homes that once sold for $500,000 were now worth half that. Families stopped paying, banks panicked. And those beautiful mathematical models that promised no risk started burning. Lehman Brothers collapsed on September 15, 2008, was the largest bankruptcy in US history, and the symbolic death of Wall Street's arrogance. That morning, thousands of bankers walked out of skyscrapers carrying cardboard boxes, the same way millions of workers would soon walk out of their jobs. The world freezes within days, markets crashed everywhere. Europe, Asia, the Middle East, no one was spared. The global financial system was so interconnected that when one link broke, the whole chain snapped. People couldn't withdraw money. Companies couldn't borrow. Investors couldn't trust each other. It was like a heart attack in the world's financial body, and no one knew if it would beat again. The US government stepped in with bailouts, $700 billion to save the system. But ask yourself, which system was really saved? The one on Main Street where families lost everything? Or the one on Wall Street where bonuses kept flowing? The human cost behind every chart and headline was a human story. Fathers sitting in their driveways watching repo trucks take away the car. Mothers packing boxes as the bank locks their front door. Children asking why they're moving again. And no one has an answer. Unemployment hit 10%. Millions lost homes. The American dream, that promise of hard work leading to security, was shattered. It wasn't just an economic crash, it was a moral one. A moment where a nation realized that its wealth was built on debt and denial. But something had changed forever. People stopped trusting the system and started questioning it. Movements like Occupy Wall Street rose up from the ashes, demanding answers. Why were the rich bailed out while the poor were left behind? Why did too big to fail become the new normal? The truth is, we never really solved the problem. We just printed more money and pushed the pain further into the future, and that's the real lesson of 2008. You can't build a stable world on unstable trust. The cycle continues if you look closely, you'll see the patterns again. Rising debt, rising speculation, and that same old confidence that, this time, it's different. But history whispers the truth. It's never different. Every boom carries the seed of its own bust. The Great Recession didn't end a cycle. It just reset it. And maybe the next crash won't start on Wall Street. Maybe it will start with us, when we forget what greed can do. The 2008 crisis was a moment when the world realized money isn't just numbers. It's trust, belief, and shared illusion. Once that illusion breaks, the whole system trembles. So the next time the news talks about markets soaring, remember this. Empires don't fall because they run out of gold. They fall because they run out of faith. Another piece of the past uncovered inside the legacy cave.